Hey, everybody. Thank you for coming back to our podcast this week, where we take about 15 minutes and try to help people steer their lives correctly, maybe bring up some points that you haven't thought about. And so we discuss business, money, and Christianity, or I guess, in other words, everything we talk about in business and money comes from a Christianity perspective. We're a financial podcast, but from a faith perspective. So I want to talk about a couple of things today that I think are critical to our success in business. And the more the more things that we do right or pay attention to, the better chance we are going to have of being successful in our business. And today's point is called cash flow management. Now, that's not the same as accounting. It's not the same as whether I'm making a profit or not making a profit. Cash flow is the money moving in and the money moving out. Do we have enough to operate on? In fact, a person will die, the business. Um, you'll die from cash starvation long before you die from lack of profit. As long as the money is moving through our business, we have money to operate with. So we could be selling at a profit and have a very large um, accounts receivable. People owe us money, but if there's not paying, we have no cash flow. And there's things that we can do to make this work. I want to read a verse out of the Bible. It's Proverbs 27:23, and it says, "Be diligent to know the state of your flocks and to look well to your herds." What's it mean? Pay attention to what makes you money. You could look out from your house and have flocks of whatever you sell, whatever you're in the business of, and you can have herds of whatever cattle. And you can look out there and say, "Man, I am very rich. I have all this cattle out there." But what if you haven't gone out there and checked them out and they're all sick and dying? Well, now you've got a problem that's going to affect your cash flow. We're not talking about our profitability. We're not talking about how how much we have people owe us money or whatnot. We're talking about the movement of money through us. So this is a key skill set. I know a lady that when she hate having bills, and this is just on a household personal, but it illustrates the point I'm trying to make. She would get a bill for, let's say, a utility, electric. She'd walk out to the mail. In the mailbox would be her bill. She would walk in the house, write a check, take it back out to the mailbox, all within 15, 20 minutes. It's paid for. Okay. But it wasn't really due for another 30 days, 3 weeks, possibly 4 weeks. So why not keep that money in your account so that you have cash flow, so you're not bouncing checks and whatnot? And so understanding working capital and the cash conversion cycle becomes very important and critical in whatever business that we're in. So um, we we need to forecast our cash out 13 to 52 weeks. So 13 weeks would be 3, a little over 3 months, out to 1 year. And not just looking at the bank balance, but what will come in, what will go out, and where are we in between. And I've watched people on this that they will buy things, they will spend money without taking consideration of what they're going to have. And then what happens is in the middle of the cycle, they end up short on money. So if we can focus on how do we get paid faster and how do we pay bills slower, we create a bubble within the cycle of what's coming in, what's going out that is artificially higher. So what do we do on this? Well, how do our customers pay? Creating a penalty if they pay beyond a certain thing, or giving them a discount if they pay within a certain time frame. There's several things that we can do and look at to increase the speed of cash flow coming in, maybe requiring so much down at the beginning, so that we have money for operation. The other thing is, when are things actually due? If it's due on a net 30 where I don't have to pay this for 30 days, why do I want to pay it in 10 days? People will say, well, I have the money right now, so I want to pay it. I get that, but that's a signature statement of somebody who does not manage their money. If I know I've got this coming up, I'm going to keep it in the account. But what if something else comes up in the meantime? I want the cash in my account. So we need to know the difference between fixed and variable cost, how to cut fast when it's needed, what can I control, what do I have no control over. All these things play an important part in there. So if we keep 3 to 6 months operating expenses in our account in reserve, then we always have an excess. And this is really good advice for even just households, is to have a 3 to 6 month reserve, knowing what your expenses are every month. Let's just say your expenses are 5,000 US dollars. Then I want to keep a minimum of $15,000 in my account. This takes care of areas where it's not working out right, where I've got an extra expense. Maybe I have to dip into that, but I have the money to dip into it. I know I've got some money coming up, and it helps me manage. A lot of people don't look at this. They're looking only at their profitability. I know I bought this for $300 and I sold it for $1,000. I was profitable, but if you don't have the money to maintain, it becomes very tedious on a person. This is why in Proverbs, the Bible said you have to know the state of your finances, of your assets, of what money's flowing in and out. That when something misses, when something's not on track, you're on top of it and you know how to handle it. So never confuse revenue, which is your sales, with cash. How much cash do I have on the table? And never confusing one-time money with reoccurring money. And it's great to build a reoccurring um, cash flow where even in a paid for service, is there a way uh, to present an example? You're going to sell a washing machine to wash your clothes in. It's a one-time purchase. Somebody buys it, you treat them well, you have, whatever, I don't know what they cost, $1,200 now that you received. Hopefully you bought it for less than that, but it's one time. You've got to sell another another washer to another person to keep money coming in. Is there a way that you can create a cash flowing payment, like include in repairs, include in service updates? You pay, let's say, let me just use numbers off the top of my head. Let's say you bought it for $300, you sold it for $1,000. You have a $700 profit in there. What if you had them put $400 down and you could carry it at $25 a month? And in that $25 a month, they have to have it so many years so that you get your full price back on it. But then if they keep it, you do the repair work, you do the maintenance on it, you keep it updated, but you have an ongoing cash stream. Now, if you play in the law of large numbers and you have 100 people doing this, now you've got $2,500 a month coming in. Not all the dishwashers or the washing machines are going to break down every single month. So you have float coming in. This is what insurance companies do. Is there a way to create a float in your business that benefits the client and benefits you, which creates money coming in? A lot of people just look at the way it's always been done and continue to do what's always been done. We need to look at our life, household finances, and our business finances differently. How do we keep the money flowing? So businesses that fail almost always die of cash flow problems, because you can't stay open if you have no cash coming in, even if you're selling things at a profit. And so even businesses that are profitable, ones that almost, you know, always they come into business, they're making money off the sell, but it's hit and miss. Maybe I have a large inventory and every unit I sell, I make money off of it, but I don't sell enough units to keep the business open. And so understanding cash flow and how to manage our cash flow becomes very important to how we're going to stay in business for a long period of time. And if we can keep money flowing in, when I was young, I worked in a convenience store, and everybody knows they're more expensive. The markup is really high, but it's for convenience. You don't have to walk across a real big parking lot. You can just go in, grab what you want. But they had these impulse items on the counter. Well, impulse items was a little snack, a candy bar, something small, something you could get. And we were constantly turning these impulse items over. And even though people came to us to buy gas or their cigarettes, they would get a soda, one of these candies that were up front, something on an impulse just because they're standing there and it was available. How do we recreate our business so that we can increase the cash flow? Do we know the state of the economy and how our business fits into the economy? Things are changing in local economies, and we have to pay attention to it so that we stay on top of it. But just because the way we've always done this business was this way, don't get stuck on that's how you have to do it. There may be other ways of doing things that you can keep the cash flowing so that you always have enough for whatever comes on the day of a problem. So thank you again for joining us here at our podcast on business, money, and Christianity. We're a financial podcast from a faith perspective. Like, subscribe, make a comment, whatever, but pay attention to your cash flow. Look out, make sure you got a reserve that you're in. Money is constantly coming, and it can take care of the things and the bills that are necessary. Thank you again for joining us. I look forward to seeing you next week.